Bitcoin has slipped back under $90,000 as the markets digest yet another Fed rate cut, and traders and investors are asking whether this is just a shakeout here or the start of something bigger. In today's video, we're going to break down what this move really means and the key levels to watch as we're heading into the weekend now, how shifting macro conditions could shape the next major trend. My name is Paul Sampson. Welcome back to DataDash. At a zoomed in approach here, looking at Bitcoin, yet again, that $93,000 just truly remains the key region to see us get back above, which we have just not done for more than a few hours at a time. We really need to see that daily close. This is the daily time frame here, and we can see how we've come down to this area. We touched it here, we lost it, and we just back tested it, closed below, comes back up, closed below, comes back up, closed below, hit our head on it, closed below, lose it again, hit our head on it, close below, hit our head on it again, close below. It's a crucial region that, yes, the more times we hit it, we could be consolidating to get that push to the upside, which is the way that I personally lean. It's just I need that confirmation for any type of upside here, folks. There's tons of smaller, shorter time frame key areas here to get involved with for any type of positions, but at the same time, for anything that's going to materialize, we have to get above that $93,000 for more reasons than one. And even if it's just taking off the, what these levels truly mean, just looking at this in the sense should be enough. Now, looking at this also in the sense of how we are, consolidating right below major resistance. I'm not a huge trend line trader or anything like that, but when you look at the ascending triangle that's essentially forming here, right? I know many are potentially looking at like a bear flag or anything of that nature. It does really look like it wants to break through this region. So until that happens, it just has to be said that that is, the number one area for us, right? I've been, hammering that in for what feels like weeks at this point. And as we're closing out the end of the year, these next few weeks, especially since we haven't seen really any fireworks here, they can get a little boring, all right? And then we can tend to not see really too much occur till the beginning of the next year. So in a few weeks here, what is it, 20 days, give or take, we're going to have all types of new data points. We're going to have new, people, the institutions and hedge funds are going to be, rebalancing their books and all that good stuff, reallocating for the new year, the new quarter, the new 6-month period. We're going to have a lot of new data that comes from that. So it may be a little bit of a more boring couple weeks here. With pretty much a nothing burger yesterday as far as the Fed rate cut goes, right? That was a pretty anticipated thing to see. And yeah, just really not too much happening here. Okay. Like we've discussed again, the two key levels for Bitcoin, which obviously we hit on Bitcoin a lot, and that translates into the altcoins, to the rest of the market. It's the pulse of the market, right? And if Bitcoin is anticipated to see any type of, major moves, we can correlate that to the rest of the market. And for Bitcoin, it really does come down to just two areas, that 93K for any upside, and then for any sizable downside, which we are in risk of coming to it, that tariff low. All right, as long as we're trading below 93,000, got to be aware that that tariff low is really on deck. Again, I've said it 100 times. It's not a death sentence at this point, because we can easily view this as also that we're consolidating right under this resistance. All right, we end up flipping that. We start closing daily candles above this, and that's what sets us up for that move higher. At this point, most likely takes place in the beginning of next month, right? So that's how I'd be looking at it. I know that we're coming back down below $90,000 again, which is a pretty, mental thing to see, the psychological level and all that stuff. But really, it's just coming down to the data here, and it's just 93K is just so crucial for that. So again, the talk of the town yesterday, which for me, I always find those days really interesting. I know a lot of people like to cover them live and things like that, but it's just so, I don't know. To me, there's so many other people doing that, I suppose, but it's usually when we see a big event, a big news event like that coming from a mile away with a time and date, especially, many times, I would say. There are some days where, yeah, we get some surprises and what have you, but really a lot of times they're nothing burgers because of that reason, right? Because everybody can anticipate it. So there's a lot of it gives a lot of context and a lot of content for that time frame. But yeah, yesterday really came down to just a simple 25 basis points cut here, obviously breaking from the old watcher guru. And then now we're discussing, Anthony Pompliano here says that QE is going to start tomorrow, right? So whether or not that's true, well, I guess we'll see there. And then Maine is another analyst here, had posted about the last 4 times we've seen QE in the past on the S&P 500 at least, were these time frames right here, these red lines. This is dating back to what looks like around, I can't really tell the year, I guess 2003. If not, that's the 3rd of November, but back in, like maybe, but this is probably the '08 collapse or something. Yeah, so that's probably about 2008, maybe 2011, 2012 here. And so those are the 3 times, one of which was pretty much coming at the end of that 2008 financial collapse. And the secondary, or the last one, coming in right at the end of COVID collapse as well. So the interesting thing about these last 4, 2 of which were at major declines. The other 2 were during uptrends, okay? And then right now we're obviously in an uptrend as well. So are we going to continue that where at least it gets us, 1 or 2? This, if again, I can't see the years that he's putting on this. I should have done a little bit more due diligence there, but this is probably at least a year in difference here. I assume this is probably, like I said, 2009-ish, and then this is probably 2012. So, 9, 10, 11, give or take. It's a good year in between. But regardless, even though between the 2 of them, we still had a huge uptrend between it. The last one as well. So just wanted to point out that if that is the case, we're entering into QE potentially in an uptrend where so far the last few times has resulted in continuation, okay? Both of these times right here, again, when we're entering it in an uptrend, you can see that we didn't even really have a pullback for a bit. And then the secondary one definitely for a bit. So it will be interesting to see how things play out. Again, I think that we're probably going to see a slower next coming weeks here. A lot of times the end of the year is just that, going back to, let's just see how, our end of the years have been. I guess last year was one of the few that was actually pretty exciting, give or take. But realistically, when we looked at it, right, this was, let's just see, we pushed up really aggressively off of the back of the election results last year, right? So November, we had that really big burst pushing us up into 100,000 in December. But basically from the time, it's the 11th today, last year on the 11th, we were, around this point right here, around 102. We spent 2 weeks pretty much just, in that region there, right? 91, with a little 10%. And then still just kind of coasted around in that area there, right? So year before that, let's just see how we ended up there. Similar situation, just kind of a range-bound activity, right? So this is the 11th here, around the same time frame as now, throughout the end of the year. Just a couple weeks of sideways action. Year before that, we go back into this realm right here. So it's just kind of a slower time in the market. Generally, so nothing to really get too concerned about if we're not going to see too much more right now. But I would be, really preparing and looking around for what we can anticipate as we start the new year. Okay. Again, S&P stock market just looks strong. Honestly, I mean, we're teetering right at the highs. Could we just, get a double top here and come down? There's always the option for that, but does really look like we want to go higher here. So it's something to be watching out for there. Could very well coast around this region for the next couple weeks as well. NASDAQ flirting around that high still. Okay, we've got gold. Looks like we're taking off to the, again, gold for me, I have these couple of regions mapped out, but I would say there's a big chance we just kind of come up and take that high again and cool off for a bit, because there's a key area we front ran right at 4,400. But either way, so far still looks pretty much what we've been anticipating. Okay, come down to that region, get the next leg up. Silver, all gas, no brakes, folks. Just complete sky high from here. So the $50 realm, right, again, is that one that I wouldn't be surprised if we came down to. All right, but at this point, we'd have to be seeing that come back below 60. So 60 is now the key floor here. Otherwise, can look for that continuation up towards that $70 region. NVIDIA is a little opposite, but realistically, NVIDIA has a bit more of a bearish setup. Again, not looking at something that I'm not trying to short this or anything along those lines, but if I'm aware of where we're going to see, or where we could see some really big fresh opportunity, it would be back down in this area. Now that'd be a huge collapse for, and I say collapse, that'd be a huge downfall for Nvidia from the high, right? It's about like a 30% move from the high. It's about 25% still from where we are now. And generally when we see Nvidia come down like that, if we did, the rest of the market would come with it. So it'd be a little odd to not, to see the divergence there. But I just got to point out that even we're looking right now as Nvidia's come down already, 15%, and we've got the S&P, still up at the highs. So it doesn't mean we can't get a little pullback out of Nvidia while others pull up. But yeah, that's still my big fresh entry key area if we get it level down below. No guarantee we get it, not overly married to it, right? We could very well turn around from this region here. But that is the big one. Like, I wouldn't be surprised, wouldn't be shocked if we got it. And if we did, that's where I'd be very interested in Nvidia again. All right, folks, that's going to wrap it up for today's update. As always, let's keep an eye on those key levels as we head into the weekend. Volatility can pick up fast in this environment. So if you found this helpful, please be sure to like and subscribe to the channel. If you haven't already, check out the links down below for our daily market notes, partner discounts, and have a great weekend, everybody. I'll see you all in the next video. And until then, everyone, cheers.